Why is the marginal tax rate going up from 12% to 22%? If I'm making $100,000 a year as a single guy, why do I have to pay 22% instead of 12%? If I'm reading a question correctly, you have to remember that they're tax brackets, right? You don't pay 22% of your $100,000. You pay a certain portion of your income from 10%, 12%, and then to 22%. If you're a single person, you're going to pay more taxes than those who are a head of household, married couples filing their taxes jointly. You have to keep that in mind. There's a tax bracket. I'm going to show you. I'm going to try to find it right now. But we're in the progressive tax system. If everyone paid 22%, that's the flat tax system, right? And we're not in that right now. And there's the regressive tax system that would be going to Target or going to a grocery store and you pay a certain percentage of the sales tax. That is flat tax because it doesn't discriminate the wealthy or the poor. Everybody going to the stores will have to pay a certain percentage of the sales tax that gets added on to the products that you purchase. Let me show you the marginal tax rate, okay? So that you have a better understanding. I do agree with the frustration of what you're seeing here, going from 12% to 22%. So this is the marginal tax rate, right? If you make $100,000, like you said, and this is the perfect scenario for it, you got to remember the standard deduction right here. People always forget about this. Like, oh man, I'm going to get taxed for 100,000. No, your taxable income is actually this. 85,400. This is how much you earned. That's $100,000. But the standard deduction means that the first 14,600 that you earn is considered non-taxable. It is not taxable income. So when you subtract that from $100,000, then now your taxable income is $85,400. Okay. Now, out of that 85,400, the first 11,600 is taxed at 10%. Okay. So you get taxed for 1,160. The next one, you get taxed up to $35,550 of your income, and that's 12%. And the tax is $4,266. The next one is 22%, but 22% of the remaining $38,250 is taxed at 22%. And this is the tax that you owe. So your marginal tax rate, that means that the highest tax rate that you're at, right? So that would be 22%. It doesn't mean that you're paying 22% of your total income, okay? Your effective tax rate doesn't show here, but if I manually calculate it, what your actual tax rate is, okay? So if you do 8415 right here, I'm gonna add these up. $8,415 plus 4,266 plus 1160. So you're paying a total of $13,841 divided by, remember, 85,400. That's your adjusted taxable income. Make sense? Okay. So your tax rate is actually 16.2%. That's the effective tax rate. Your marginal tax rate is 22%. So 22% is the highest tax rate that where you are based on your current income, but your effective tax rate is 16.2%. I'm going to choose a different color here. It's all red, but 16.2% is what's called the effective tax rate. Okay. That's how much you actually pay towards the government. So 13,841. If you get paid bi-weekly, they're taking $530 out of your paycheck every 2 weeks towards the federal income tax. So keep that in mind. But why is it going from 12% to 22%? Trump actually reduced the tax rates. This used to be the old tax rates here. It used to be 10, 15, 25, 28. Take a look at this. This is the old tax rates prior to 2017 here. And it changed to 10, 12, 22, and 24. So right now, this is where we are, 10, 12, 22, 24. And when the Tax Cuts and Jobs Act got passed, the tax rates went down from 25 to 22 and 28 to 24. Look at this, 15 to 12. So taxes significantly decreased starting in 2017. It might go back up because this is supposed to expire after 2025, after 2025. And if Congress doesn't they're like, oh, we don't want to extend the Tax Cuts and Jobs Act. We're going to go back to the 10, 15, 25, and 28%. So I know most humans, we all have short-term memory on the things that happen almost on an annual basis, right? So there are ways to reduce your taxes. I know $100,000 is a good problem to have, right? Especially for a single guy that you said yourself. Just there are ways to reduce your taxable income. There's HSA, take a look at it. And there's also the traditional 401k. You can reduce your income. The standard deduction is already at 14,000, but if you want to donate, you can, but you have to exceed that standard deduction, right? So there aren't that many things that you can find to write it off as a single guy, but HSA and traditional 401k would be the first place to start. And then you can always find different things to maybe reduce your taxable income. But yeah, you're going to be at between 12 and 22% for the marginal tax rate based on your income. Could we go from 12 to 15% in the future? Possibly. Congress could say, you know what, let's go ahead and change the brackets from 12 to 15 to 22%. I agree, there's a huge gap. But if you look at once you go past 24%, it goes from 24 to 32%. So it's pretty clear that the government is kind of like, people in their 30% marginal tax rate, and then people in their 20%, and then people below the 12% marginal tax rate. But most people a majority of people actually pay a lot less taxes than they are, because, when you make less than, say, $40,000 a year, right? I was showing you guys that earlier with how much you make from, as a single person, the first 11,600, that's 10%. And then the remaining for the $47,000 in income, you only pay 12%. But yeah, great question.